most people are choosing the right area for a stop, but brokers, market makers, they all know where these stops are lying, and often the market will just come and clip out these stops to maximize trade, and then the market will be on its way. So within trading, you've always got to think outside of the box, and the classic put your stop 2 points above a key level. For me, that's a bit of a waste of time. You've got to see the market actually tell you, is it happy trading above or below a level? Now, it just so happens today, we are going to probably have a very good example on the FTSE, because if I go to this chart, this is just a daily chart, sorry, a 1 hour chart from yesterday's action. But you'll see this line here is up at 76.87. So let me go to a different screen and show you what's going on with that one. All right, so this is a daily chart on the FTSE, and you'll see that we've had this big breakdown from this consolidation pattern in May, and we've retested this breakdown in June, and then we've seen a big sell-off, and now we're back at this blue line. Now, if I was short in the market, this would be the area where I'd be thinking, well, if we start getting acceptance or we get a move above here, I'm going to come out of my trade. And I won't be the only person thinking that. There'll be many short sellers out there that are getting squeezed right now, and they'll have their stops above this area. Now, the reason they've got that is the most obvious area to put the stop. And if it does get above there, then it's likely we're going to move on up to, well, we've got an unfilled gap at 7,750, and then, we've got resistance at 7,800. So this area it's potentially a breakout level, but it's also an area where you could get a lot of people get stopped out, and then it just reverses and we see a correction, which brings me on to acceptance. So we know this is the correct area to have a stop, but what type of stop do we want above there? So this line is 76.86, okay? 76.86, I'm just checking on this one as well. Actually, it says on this, it's 77.84, but we'll call it 77.86, give it a bit of room. So what we want to see for the FTSE, I generally go by, I use a 1 minute chart for acceptance in the first 30 minutes on the FTSE, and then after that, I'll use a 5 minute chart. Now, acceptance is a full 1 minute or 5 minute bar closing body and wick above this level in question. And then once we've seen that, it's a subsequent break of that bar. And that's then telling me the market is indeed breaking out above this, and it's going to move on higher. What it's going to stop me from doing is getting clipped out on a spike above this level, clearing out some stops, and then moving down again. Now, the price action on the FTSE at the moment has already taken this level out of hours. So people would have got stopped already on this one. But that's another thing to add as well. Acceptance can really only be used during cash hours, because out of hours, like now, the market hasn't opened. It's not pure price action for the real FTSE actual cash open market. So what I want to see is the FTSE open, and let's see if we get acceptance above the 76.86 level, or we don't. And if we don't get acceptance, there's a good chance that this could sell off. We could have a bit of a retracement today. But if we do get acceptance, then I think I'll be looking for buys now. Now, does this look overbought? Yes, but there's no reason this can't go higher. So again, let the market tell us when we're wrong. So we may well take a 5-minute bar break up today on the FTSE. So again, the classic rules for this is the first 30 minutes after the open. So 8 o'clock UK time to 8:30, I'll use a 1-minute chart for acceptance above or below my chosen stop area. After that, I'll use a 5-minute. The reason I use different time charts is that the FTSE action slows down after the first half an hour. So we want to be using a higher time frame. In the first half an hour, the action's moving quite quickly, consistently, and the market can run away. So using a 5-minute chart is often not useful in this case, because the market could just take off and then suddenly your stop is quite big. Now, this is on a day trading aspect, but if you're looking at a big swing trade, so a very much a long-term trade, and you're looking for, you know, hundreds of points, maybe a multi-month move, then you could look at using 1 hour acceptance. So that would mean that you've seen a full 1 hour of trade. So it's going to be a 1 hour candlestick, closing body and wick above the relevant level, and then a subsequent break of that. Okay, it's very useful, that it's very important to note that if you get acceptance, you do need to see that bar break by 2 points, up or down. Okay, that's very, very important. And by using this, it will stop you getting out of the market when the market actually it is going to continue. It's actually just going to clip some stops, and then it's going to move on down. And the opposite is true as well. If you bought the market and you've got a stop at say 7,000, which is a big number on the FTSE, you know, it doesn't make sense to have your stop 2 points below 7,000. You know, you're just asking for trouble. You're asking to get stopped out of the market, and you're asking for your money to be taken. So that's why we use acceptance, guys. It's a very, very useful strategy to use. And again, I'm very happy to answer some questions. Hopefully we'll get a live example of acceptance today when the market opens. So in terms of what we'll be doing today, well, firstly, I will be looking at this line of resistance. And the first thing I want to be looking at is, do we get acceptance? If we do, we may well get a 5-minute bar breakup today as a trade. And if we don't get acceptance, we may well take a 5-minute bar break to the downside. Okay. The other thing to note as well is, I have flagged it, but the closing gap should fill today. The only caveat, as I said, the only caveat for that is we are on this breakout area. So I'm not going to get us into a sell at the open for the gap. I just think, you know, we could have an unexpected squeeze to the upside. So again, I just really want the market to confirm yes or no, what are we doing around this level? So does that make sense to everyone, guys? I would really recommend that you start using acceptance. And if you can't be at your screen, you can't look at the action, you can set an alert to come back to your screen if price action gets to those levels. Or what you can do is, another technique that I use is, if I've got a stop in mind, I will simply add on 15% ATR. So let me just show you what that is. So on our reports each day, this is a percentage value. It's a 15% percentage value of the 5-day average true range. Okay. And what I will do is I will simply add on I'll round it up, but in this example, I'd add on 11 points to my stop. So what is this doing? It's separating you from the herd, and it's stopping you from just putting your stop at a very obvious area that's going to get clipped out of the market. Remember, to make money in the markets, you have to be different. You have to act different. If 5% of people are making all the big money, then like everything in life, and it is everything in life, that 5% percentage of people making lots of money in trading is exactly the same as any business that you look at in the world. Everyone has a negative bias towards the success rate of trading, but actually the percentages are exactly the same across everything in life, whether it's wealth, whether it's the percentage of businesses that succeed and don't, whether it is sportsmen reaching a high enough level where I can actually make enough money to survive in the sportsman world. It's everything. So you've got to be acting very differently. People that are successful in businesses, they act very different to people that are maybe not who are not successful in businesses. Okay, so that's why we want to do things very, very differently. And I think those of you who have joined our programs like Blueprint, we always get the same comments. This is totally different to what we have ever joined in the past. And it is. Blueprint is it's a totally different way of approaching trades. And that's why it's successful, because we're doing things that are not written in textbooks. You can't find it on YouTube. It's from actual experience, not a book. Right, we've got 5 minutes to the open. So Glenn, you may need to watch the recording again, but acceptance, as I said, you've got your stop level in place and you wait for a full 5-minute bar, if it's after the first half an hour, to close body and wick above that level. Or if it's the first half an hour, you wait for 1 minute. We'll probably get an example when the market opens, so I can show you show you on the chart what acceptance is looking like. And then again, once it's live, you can use it going forward. This is our daily report today on FTSE, and it's really just saying, look, we have got, well, we've already seen this level surpass. So actually, this is from yesterday, but we were saying if we get above here, then we're moving up to 7,750. So we're not looking to sell. I have put on the report today that the gap, it is technically good to go. But as I said, I'm just a little bit wary of getting in at the open, but we will use it as a potential sell trade or a target once we've seen the open. So trades today, well, this is yesterday, acceptance above 7,650. So we have seen acceptance above this level yesterday. So we're getting a move up to 7,700, which actually we're seeing right now. And then after this, we're likely to go to 7,750. And then if we did get a sell-off, then we've got a buy zone down here. But this is way off. So I think let's just focus on buys today, or potentially if we do fail at that 7,686 level, we might better get in on a sell. But I'm probably going to use the 5-minute bar today for direction, guys. And I'll tell you if we get into a trade. So while we wait for the market to open, I suggest, if you haven't added the Telegram free app, I posted the link into the webinar chat. The link is there. You of course do need to add Telegram to your phone first, but once you've done that, just click on the link and you'll get to that screen which you saw at the beginning of the presentation, and you can get on board, guys. Right, I just want to make sure that you can see the screen now, guys. So this is actually a live feed on the FTSE. I'm gonna move it to a 5-minute chart. Actually, sorry, I'm gonna go to a 1-minute chart because we're gonna use the 1 minute to begin with. And remember that 86 level is here. So let's just put a line across there. Okay, market is actually opening now. So let's see. Let's see what we get. Oops. So if you were short in this market, you know, you're stopped. You already stopped out of the market. What we're seeing here is a 1-minute bar. And we'll wait for this to close, okay? We'll wait for this to close. But look at this, it's just, this is an indication of a lot of stops going off, guys. That is a lot of stops going off in the market, this spike. And that's why I didn't want to sell the market for the gap straight away. But what you've just seen there is a hell of a lot of stops just go off above this level. So those people have just been stopped out and they'll be pissed off now, but we may well take the opposite trade. So, right, that's your acceptance done. So what the market will need to do is we'll need to see this bar break up by 2 points for it to be acceptance. So we can see this bar is actually fully above 7686, but for acceptance to come in play, it does need to break by 2 points. So first of all, you observe the bar above or below the relevant level, and then it's a break of that bar to confirm acceptance. I choose between 1 minute. I'd use the 1 minute chart in the first 30 minutes of action, and I use the 5-minute chart thereafter. So 8 o'clock to 8:30 UK time, I will use the 1 minute, and then after 8:30 AM UK time, I'll use a 5-minute chart. Okay. So that's what I'm using, guys. Does that make sense, guys? So that is a live example of what acceptance is. It hasn't triggered, but we'll see if it triggers or not. If it does trigger, there's a good basis that this is going on up. Let's see. A 2-point break above this level is 7702. 7702. And if we don't get that acceptance, we may well look for a sell. But again, I'll be using the 5-minute chart. So I'm just gonna come off the 1 minute now. I'm gonna go to a 5-minute chart. Look at that pin bar. That's a real big pin bar that's formed. Interesting. So guys, can you see the screen if I flick around now? Can you still see the chart, the live chart with the FTSE feed? Just let me know. Or can someone actually just put into the webinar chat? I just want to check. You can. Okay, good. Okay, so I just want to make sure that I can flick around and you don't lose the screen. So that's fine. So at the moment, guys, what you've seen there is a classic, potentially a classic stop run. And we don't really want to get long unless we break above here today. But if we do get above there, we can look on a 5-minute bar. Take a 5-minute bar break. And likewise, the 5-minute bar break to the downside is okay. It's against the trend, but so be it, you know. So the 5-minute bar method, guys, is you will buy if it goes 2 points above the opening 5-minute bar. Your stop will be 2 points below the opening 5-minute bar. And likewise, if it breaks down by 2 points, you're going to sell with your stop 2 points above the bar. This is literally just a delivery. Think of it as a delivery method into the market. I quite like getting in during the first 5 minutes. I'm not going to have a target. I'll tell you when the target is, but the target will be based on the price action. So this is not a typical system as such. It is a delivery mechanism. Look, we may get triggered into a buy in a second. Let's see. Not yet. Haven't seen a 2-point break yet on this one. Let's see. So I have to be a bit patient here. Some of you that have been to earlier webinars, you know, we can often say that the 5-minute bar will trade length because it often does. So that is a kind of price objective. But I would probably look for a little bit more to take out of this if it triggers. Okay, potential sell coming up, guys. Again, if it breaks by 2 points to the downside, then you can sell it. Not quite. It's gone down by a pip. It needs a 2-point break. So the low is 86 here. We need this bar to get to 84. At the moment, the low is 85. It must break by 2 points. So let's see. Okay, that's triggered now into the sell. So sell has triggered. I think naturally this will probably move down towards the gap, down at 76, 78. But we'll watch the price action. So let's just move on to a 1 minute and observe. Now, the stop for this has to be above the highs. If we get above there, the FTSE is likely to push on up. This is against the trend, but I like the fact that it's had a stop run above here. So we'll just see. We'll see how this goes. Because we're against the trend, I would probably like you to take half profits at 76, 78. So as we get down to 76, 78, I want you to take half profits. That means if you've sold by 2 points, you need to, if you've sold $10, you would close $5. And then I'll actively manage the trade for you. If you've got any questions in the meantime, let me know. So just as well, just to reiterate, this is not anything to do with Blueprint day, guys. This is just short-term day trading. Blueprint is very different. They are our 9 very high probability market function trades. What you're looking at today is market price action experience. We're really just observing the price and making informed decisions based on price. So it's a very different type of trading. This, of course, is nowhere near as high probability as the Blueprint stuff. But it can be very lucrative, but you do need to be making informed decisions. Right, for now, the stop is still above the highs. If it changes, I will tell you to move your stop, but for now, the stop remains a break of these highs. If that goes, then we will be out of the trade. There is actually a case then that you would buy the market. If it gets above here, you would simply stop and reverse and go long. But anyway, that's we don't need to discuss that yet. Let's just, it's going down at the moment, so let's just ride the move down for now. I'm just going to come off the air for a bit, guys. As I said, if it gets down to 76, 78, do take your half profits. And I'll come back on the mic and see where we are. But at the moment, stop still remains above the high. Let's see. All right, guys. So hopefully you've taken your half profits. We did hit 78. So we've just reduced. The reason I've reduced our risk on this is the only reason is because we're in a very strong trend at the moment. That is the only reason, guys. Just that potential that it may just fill the gap today, which it has. I mean, it was on the trade plan, but as I said, the reason I didn't take it was I just could have got that. Well, we got that spike up, so I didn't want to be selling the open. Stop still remains above the highs here, guys, but I might tighten that shortly. I just want to see where this retracement goes, but for now, the stop remains above the highs. So on my screen, you'll see that I put a Fibonacci tool on this one. Generally, I'm happy for the FTSE to test the 78 or just get above it. But I don't want to then see it subsequently break, because then it often will just take out the highs. So I often tighten my stop using the 78% retracement on the Fibonacci tool. But at the moment, everything's fine. We're below that. You know, it's fine. I'm also quite worried that unless it does break the high, we still don't have acceptance. So let's see. So normally, guys, I would now have my stop above here for this trade. But as I said, we have taken our half profits down at 78 to reduce our risk. And on the basis that we only get acceptance if we do break the highs, I'm happy to stay short in the market. Okay, so usually, as I said, it would be above now here, but I'm going to give it the benefit of the doubt and keep it above the highs, given that we have reduced our risk. So stop still remains above there, guys. Jim, it may be, if your chart only reached 83, it may be you're looking at a futures contract. Just make sure you're looking at an actual FTSE cash contract. So it must be a cash contract, not a futures contract. There's a big difference. I mean, it's fine. It's fine anyway, Jason, because if your broker is trading differently, then you're still getting in at the same time as me. Okay, it might be a different price level, but you're still exiting and entering at the same time. So okay, it might be different prices, but you're still doing the same thing. It's interesting how FTSE has broken down, false break above this level, come back up, nice retracement, 76% retracement, bang on, and then it's broken back down again, retested it, and then it's moving back down again. So again, all we're doing is watching the market. The market will tell us what it wants to do. Jonathan, that was done at the beginning of the market open, but just very quickly, if I show you on the daily chart, you can see the line here. So what we've seen here in May is a consolidation pattern, and we've eventually broken down through here. We've come back, we've retested it in June, and then we've got this big sell-off, and now we're just retesting it again. And what I was saying at the beginning of the presentation is a lot of people would have put their stops above this level this morning, and they would have got stopped out, and we're simply just taking the reverse of their trades. So they've got closed out, and we are now entering our new position on the basis of that. Yeah, you might need to watch the recording again. All right, guys. So generally with the 5-minute bar chart, I watch it until the market tells me that I'm wrong. Sorry, not wrong. I stay in it really until the market tells me otherwise. But I will be adjusting my risk profile as this moves on. We'll just keep watching this at the moment and just see how this plays out. $65 is a pivot point. Do you know what? Jason's asking, where's the target expected? This is very controversial, but I have no idea. I will watch this until the market tells me to get out, and we'll ride it down until we can. But we do have some support down at 65, daily pivot point. We'll see. That was a previous breakout, but to be honest, if that goes, then we could be on for the start of a bit of a correction in the market, in which case we'll ride this lower. Now, if you want to be risk conservative now as well, I would probably say with the points that you made on the first half of the trade, you could pay for a stop above here, 86. So if you're in at 84, you made 6 points of profit. So basically your stop is 6 points above your entry. So it's basically you paid for a stop at 90, guys. And then, in fact, let's just do that. Let's just move your stop to 90, and then you can't lose out on the trade. And it means that the market would be getting above 86. Does that make sense, guys? Let me know if that makes sense. So we took the short on the 5-minute bar breakdown at 84. We came out half at 78. That locked in 6 points of profit. We therefore add on 6 points to our entry. 84 plus 6 is 90. Then if we put our stop at 90, if it goes back up to 90, we're out of the trade with no loss and no win, but no loss. And I think that kind of makes sense at this point anyway, because you know it's broken through this key level, it's retested it. I think if it does get above it again, yeah, we're probably wrong. Or it's just going to consolidate all day and not really do too much. But otherwise, we'll stay in the trade. I mean, really, let's just see. Well, daily chart. Let me get rid of this. Oops, it's the wrong way. Yeah, I mean, look, a conservative level for this would be down at 70. I would call it 7,600, guys. So I'm just going to give you a target now because this trade is risk-free, and it's down at 7,600. So 80 points below where we are now. And I am actually going to have to go now anyway, guys. So hopefully you enjoyed today's trading session. You got an idea of what we're looking at. risk control, delivery mechanisms into the market. You've learned about acceptance. If this is something that you're interested in, we do it every day. The live room is part of the Blueprint program as a bonus. So if you join Blueprint today, you get the live room every day for a whole year. So you basically get this every day for a year. So if you're interested in that, you should have got emails about Blueprint. The offer is closing down this week. If you want to get involved and get those bonuses, then yeah, check your inbox. And if you've got any questions, you can always email me, mark@magnetictrading.com. And we can discuss if you are the right fit for getting on board with us. So has anyone got any questions before we call it a day? John's asking, hi guys, when the market has been open for 20 to 30 minutes, which candles are you basing your buys and sells on? I'm not, I'm already in. I generally am getting in quite early and I'm managing the trade, John, on the FTSE, that is. Cameron trades adapt a bit differently to me, but on FTSE, I generally find first 5 minutes optimal time to deliver myself into the market, and then I'll just trade it pretty much how you've been seeing today. So it's, you know, it's a combination of a simple delivery method into the market and then price action. Do I trade gold currencies? No, I don't. I've spent the last 20 years honing my skills on the FTSE. So I generally just trade the FTSE, actually, guys, because it's where I make all my money. The reason I make more of my money on it is because I just know it inside out. You know, if you've been watching the same market for 20 years every single day, because I used to be in the banks and I used to watch FTSE every single day for 10 years. And then I left as a full-time trader and I've been trading ever since. In fact, it's more than 20 years I've been trading the FTSE, a lot longer, but that's my age showing. But yeah, that's the answer. There's no point in me trading on markets because I just increase my leverage on the FTSE. If something's working, I don't need to go look at other things. But I will trade different markets for the Blueprint. But in very short-term price action, day trading, I'll just do the FTSE. Okay, any further questions, guys? So a reminder, your target for this trade is down at 7,600. You've got a free stop at 7,690. Has anyone got any further questions? All right, great. It's been a pleasure trading with you guys. And for most of you, I'll be back tomorrow in the live room. And for those of you on the sidelines, have a think about if you want to join us and get part of the magnetic trading. Okay, guys, see you at another free trading session in about 2 weeks' time.